Hi, this is Jeff, and he can't afford his groceries at the supermarket. Jeff is broke. Don't be like Jeff. And he wonders why the prices are so high. That has to do with something called supply and demand. Let's start with demand. Imagine a supermarket that sells bananas and apples. Many people want to buy them, but the supermarket doesn't have enough. This situation is called supply and demand. The demand is high because a lot of people want bananas and apples. But the supply is low because the supermarket doesn't have enough for everyone. When demand is higher than supply, the supermarket often raises the prices. That way, fewer people will buy, and the supermarket can balance how much they sell with how much they have. This is why prices go up when many people want something, but there isn't enough of it. That's called the law of demand. Let's look at another example. The harvest was bad, and that's why there is little bread and vegetables. When there is less bread and vegetables, the farmer has to raise the prices, because many people want bread and vegetables, but there is not enough for everyone. This shows that prices do not only depend on what people want, but also on how much food exists in the market. Let's look at supply. The prices of apples and bananas in the supermarket are too high, and because of that, there are no customers. The seller has to lower the prices. When the prices are fair, customers come back. Customers buy again in the supermarket because the price is fair. This shows that prices must be balanced. Let's look at another example. Many people want a smartphone, but then a new model comes out and nobody wants the old one anymore. Because of that, the company has to lower the price of the old smartphone so that people will still buy it. This shows that when demand goes down, prices must also go down to attract customers. This shows that prices must be balanced. If prices are too high, people won't buy. And if prices are too low, the seller cannot make enough money. Fair prices help both customers and sellers. How supply and demand work together. If demand is high and supply is low, prices go up. If supply is high and demand is low, prices go down. When supply and demand are balanced, we reach the equilibrium price, the ideal price where supply equals demand. This is why supermarkets lower prices of apples and bananas when nobody buys them, and why companies reduce the price of old smartphones when a new model comes out. Fair prices help both customers and sellers, and the market works best when supply and demand are in balance. But why does it matter? Understanding supply and demand helps explain why prices change, how businesses decide what to produce, how resources are allocated in the economy. It's a simple concept, but it influences almost every part of our economic lives. Let's come to the summary. So, to sum it up, demand is what people want, supply is what producers provide, and price is where the two meet. Thanks for watching this video. Don't forget to watch my other videos too if you want to learn about the market.